An insatiable appetite for news. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of February 26, 2018. I'm recording this on Sunday, the 25th. And I say the market has an insatiable appetite for news. You know, that's always the case. The market participants are always looking for news and information on which to base their forecast and actions in the market. But it seems like lately, starting in early February, that appetite has increased to like a ravenous level where the market is just looking for a sign. What's going to happen next? You know, we're at the we've been in a bull market for so long, over 8 years, and it's been incredible. And everybody wants to know, is it going to end? If so, when? Should I stay with it for more gains, or should I protect myself against pullbacks? And it seems that any information coming in is kind of amplified. Last week I said we were at a decision point in the market. We had a couple of really big companies and bellwether type institutions, Home Depot and Walmart, reporting earnings. The result were mixed. Home Depot had pretty strong earnings and forecast, and they were up. Walmart had good results, but some disappointment in online sales and some doubt about their ability to compete with Amazon, and they got punished. Their shares did anyway. So this coming week, we've got some big deal. So on Friday, you can see we had some strength. First part of the week, the market had pulled back a little bit. We had some strength on Friday as the Fed issued their annual report to Congress, and there was no language, at least that people could interpret, about additional rate hikes. But this coming Tuesday, Jeremy Powell, the new Fed chair, will be testifying before Congress for the first time, and you can bet the market will be hanging on every word of that testimony. That starts on Tuesday. On Wednesday we have GDP released, and then Mr. Powell will then conclude his remarks on Thursday. So Tuesday, Wednesday, Thursday, big days, a lot of information, and I think again the market has an insatiable appetite and maybe an exaggerated response to information. So the bottom line is we should expect more volatility in the market. And volatility has been good for day traders, and it's been good for us as well. We've done pretty well with these moves. We're still at a key decision point in the market. After the drop of early February, the S&P, I'm showing the daily chart here, is pulled up into this Ichimoku cloud area. It's a key decision point. Whichever way it breaks, above the cloud, probably on the new highs. Below, we're probably going to retrace at least into this short-term zone, below about 25.47 down to 24.17, maybe lower. So we're waiting and watching like everybody else, and we're prepared to respond whichever way it goes. We do have you see this yellow triangle here. This is a pyramid trading point. It's bearish. It's a potential. When it's yellow, it's potential. If price goes above the top of this, it will disappear and be disqualified. If price gets low, then we got it'll be turned red, and we got a bigger move coming. But in this narrow range, again, I think if we break above the Ichimoku cloud, more highs. Below it, retracement. So we have to wait and watch. We're being very careful. We are taking some trades, but it's a decision point, and where it goes from here could indicate future moves. So we'll trade our plan, right? We'll be disciplined. We'll follow our rules, take good entries when they present themselves, manage the trades, manage risk, and participate in whichever way the market goes. When it goes down faster, and there's a lot of profit to be made for those who are prepared and ready. So I wish I had a crystal ball. I wish I knew for sure which way it was going, but I don't, and that's okay because I can read price action, and when it's proven what's going to happen next, or the probability of what's going to happen next, then we're going to trade accordingly, and over the years that's served us very well. We've made a lot of profit doing that. So at a key decision point, market's waiting for new information, and we will see how they respond to it. Let's take a look at the oil market as always. We've been talking about being bullish on oil for a little while now. We had the big run up. Get my chart set up right here for you. We had the big run up over the summer. That was amazing. And then this perfect correction, and now it looks like it is beginning its continuation on to a wave 5. I'm showing a 60-minute chart here. We got long on oil. We're still long. We're going to stay with it. And right now the signs are, if this continues, to get up above 70, up 72, top end 77. We'll see if that plays out. It's a little contrary to fundamentals, but that's the technical analysis, and we rely on that, and it's been accurate far more than not. So we're long oil, we're staying with it, and we're looking for an initial target up above $70 a barrel on crude oil. There it is. Let's take a look at gold as well. We were long gold. We got stopped out on that at break even. It's been very volatile. We had this big move up. We had the correction. It looked like it was going to take off, and then it pulled back down. Took us out right about our entry. That's a good way to lose, right? If you're going to lose a trade, lose it at break even. It is showing signs of starting up again. So we'll watch for breaks above the cloud, and we'll probably try another long and see if gold can get up to the target above 1378. So that's it for this week. Again, information coming out with Mr. Powell's report to Congress on Tuesday, GDP Wednesday, follow-up comments from the Fed Chair, Jeremy Powell, on Thursday. So barring any other breaking news, that's probably what's going to move the market. We have a lot of companies reporting earnings, but no really big bellwether type companies. So we'll keep our powder dry. We will have capital available. If a trend develops, we'll participate in it, of course, in a disciplined manner, following all the rules. Take care. Trade safe. It's never dull. And if things change midweek, if something dramatic happens, of course, I'll send out a regular special update in addition to the regular weekend editions of the newsletter. All right. I welcome your questions, your comments, your feedback on the blog post, on the YouTube video. I try to respond to every single one. Thanks, and we'll catch you on the next one. Bye.